Last week, 38 House Republicans defied President-elect Trump by refusing to vote in favor of lifting the government's debt ceiling. This may be the first clear indication that the growth in government debt is more likely to decelerate than to accelerate in 2025. If it does, expect the economy to weaken sharply and asset prices to fall. This video will explain why. During the third quarter of this year, wealth in the United States increased by $4.8 trillion. Total credit in the country exceeded $100 trillion for the first time, and real GDP growth came in at a strong 3.1%. In fact, economic growth in the U.S. has been surprisingly strong since mid-2022, even though most economists had expected a recession. Up until the crisis of 2008, credit growth was the main driver of economic growth in the U.S. And when credit growth was weak, the economy went into recession. Between 1952 and 2009, all 9 times that total credit, adjusted for inflation, grew by less than 2% a year, a recession followed, as shown in this chart. Total credit is in red, GDP growth is in blue, both adjusted for inflation. Every time total credit grew by less than 2%, the economy went into recession. Every time. But in recent years, that pattern hasn't held. Since mid-2022, economic growth has been strong, even though total credit adjusted for inflation has been well below the 2% recession threshold. As you can see here, credit growth has been weak, but economic growth has been strong. It appears that the extraordinary surge in wealth has been powering the economy in recent years, despite weak credit growth. Household wealth grew to $169 trillion in Q3. It's increased by $108 trillion, by 2.8 times since 2008. It's increased by $52 trillion, 44% since 2019, and by $17 trillion, or 11% over the last year. This is an explosion of wealth. To put that into perspective, total U.S. government debt is $36 trillion. So the increase since 2019 would be enough to pay off all government debt, with $16 trillion left over. Even the $17 trillion increase in wealth over the last year would be enough to pay off half the government debt. This chart shows that wealth increased by $4.8 trillion during the third quarter alone. That's more than $2 billion an hour. The booming stock market has been the main source of this extraordinary surge in wealth. During the third quarter, for instance, rising equity prices accounted for 79% of the $4.8 trillion increase in wealth. Stock prices have been rising for several reasons, including, first, the unprecedented amount of fiscal and monetary stimulus dished out during the COVID pandemic, which radically increased the amount of liquidity in the financial markets. Second, expectations that the Fed would cut interest rates sharply. Third, excitement surrounding the AI revolution. And finally, the fact that much of the general public has been caught up in a kind of investment mania. However, the ground underneath the booming stock market is beginning to look increasingly shaky. The Fed is tightening liquidity at the rate of about $60 billion a month through quantitative tightening. It's already destroyed $2 trillion out of the $5 trillion of liquidity that it created during the COVID pandemic.